Imagine a world where your morning coffee comes from beans grown in Ethiopia, roasted in Italy, and delivered to your doorstep by a drone manufactured in China. This isn't science fiction, it's the reality of our interconnected global economy. But how has this landscape shifted in the last 2 decades, and what does it mean for savvy investors? Welcome to the Savvy Finance Corner YouTube channel. 20 years ago, globalization primarily revolved around trade liberalization, outsourcing, and the movement of physical goods across borders. Today, it's a far more complex tapestry that includes digital services, intellectual property, and even labor through remote work. This acceleration of cross-border connectivity has been driven by advancements in technology, trade, and finance. The advent of 5G networks, blockchain technology, and cloud computing now allows for instant transactions and seamless international business operations. Trade agreements continue to break down barriers, while financial innovations like cryptocurrencies and digital banking enable money to flow globally with fewer restrictions than ever before. Cross-border data flows are growing exponentially. With e-commerce giants like Amazon and Alibaba, fintech disruptors such as Wise and Revolut, and streaming services like Netflix, demonstrating how value creation is no longer limited by geography. This digital revolution is reshaping industries and creating new opportunities for investors who can spot emerging trends. The COVID-19 pandemic and ongoing geopolitical tensions have also reshaped the global landscape, particularly in terms of supply chain management. Many businesses are now diversifying their production away from over-reliance on a single country, such as China, to countries like Vietnam, India, and Mexico. This shift toward supply chain resilience presents both challenges and opportunities for cross-border investments. Meanwhile, emerging markets in India, Southeast Asia, and Africa are becoming increasingly attractive to global investors. These regions boast young populations, rapidly expanding middle classes, and fast-growing digital economies. India, for instance, is on track to become the world's third-largest economy by 2030, while Africa's fintech sector is attracting billions in investment from around the world. Another exciting trend is the rise of green globalization. With international collaboration on clean energy projects becoming more common, the fight against climate change is creating cross-border alliances with investments in solar, wind, and hydrogen projects often involving multinational cooperation. The European Union, United States, and various Asian nations are forming partnerships to accelerate decarbonization efforts, opening up new avenues for environmentally conscious investors. So, how can investors capitalize on these global trends? These companies provide indirect global exposure without the need to navigate foreign stock markets directly. For those seeking more direct involvement, purchasing shares of foreign-listed companies is increasingly accessible through modern trading platforms. Real estate remains a popular choice for cross-border investment, offering diversification and potential safety. U.S. investors often look to European property markets, while Asian investors frequently purchase real estate in Canada and Australia. For those with a higher risk tolerance, private equity and venture capital in emerging economies can offer substantial returns. Startups in Africa, India, and Southeast Asia are booming, particularly in sectors like fintech, logistics, and clean energy. Global initiatives in transport, energy grids, and digital connectivity are being funded by international capital. China's Belt and Road Initiative and multinational renewable energy projects highlight the scale and potential of these opportunities. However, cross-border investments come with their own set of challenges. Regulatory and political barriers can also pose significant hurdles, with countries imposing restrictions on foreign ownership or requiring local partnerships. Taxation differences add another layer of complexity that investors must navigate carefully. Cultural and business practice differences should not be underestimated. Misunderstandings in these areas can lead to costly mistakes, emphasizing the importance of thorough research and local partnerships. Geopolitical risks remain a constant concern in the world of global investing. Trade wars, sanctions, and political instability can disrupt markets overnight. As we've seen with the Russia-Ukraine conflict's impact on global energy and agriculture supply chains, exchange-traded funds, ETFs, and global funds offer an easier entry point for many investors, providing exposure to international markets without the need to directly purchase foreign stocks. These instruments can reduce complexity and risk while still allowing investors to benefit from global growth trends. It's also important to balance short-term volatility with long-term growth potential. Global investments may experience significant fluctuations in the short run, but over the long term, they often outperform due to diversification benefits and access to high-growth regions. Looking ahead to 2025 and beyond, we can expect several key trends to shape the future of globalization and cross-border investments. Digital trade is likely to continue its rapid expansion, with AI streamlining supply chains and enhancing customer targeting across borders. Artificial intelligence will play an increasingly important role in global connectivity, enabling businesses to scale internationally faster than ever before. Green investments are set to become even more prominent, with cross-border capital increasingly targeting clean energy projects, ESG-compliant businesses, and sustainable infrastructure. Investors who position themselves ahead of this trend may find significant opportunities in the years to come. To prepare for this evolving landscape, investors should stay informed about global policy changes, maintain diversified portfolios, and adopt new digital investment tools such as tokenized assets. The ability to adapt quickly to new technologies and market conditions will be crucial for success in the global investment arena. In conclusion, while some argue that we're entering an era of deglobalization, the evidence suggests that globalization is not disappearing, but rather transforming, shifting towards digital, green, and multipolar structures. Cross-border investments continue to present enormous opportunities for those who approach them strategically, with the right mix of caution, diversification, and long-term vision. Investors can position themselves to benefit from the next wave of global integration. The world may be changing, but for the savvy investor, it's a world full of potential.